Hi, and welcome back to our channel at Your Financial Genie. My name is Ilkay Sepulveda, and I have been in financial services since 1993. And today we are going to talk about financial stability in retirement. And a common question that I get asked often is, how much money do I need to retire comfortably? And the answer to that is that it really depends. It depends on what your lifestyle is now and whether you want to continue the same level of lifestyle in retirement. And if so, what I would recommend is start with a budget. So in your budget, make sure that you have an inventory of all of your current expenses and factor in inflation for retirement. So that will give you an idea of how much money you're going to need per month in retirement. Now, there may be some of your expenses that aren't going to go into your retirement years, such as maybe your mortgage will be paid off. But most of your other expenses will continue as long as you want to have the same level of lifestyle. Once you know what that amount is per month that you need to create, then you can look into options for creating income to make sure that you have enough income in retirement. A common mistake that I see for retirees is that they lack a comprehensive retirement plan. I see a lot of people that have maybe some investments here and some investments there. They have a 401k and an IRA, and they're just kind of trying to piece it together. What I would recommend is to sit down and put together a comprehensive plan. What is your retirement going to look like? What are you going to do every day in retirement? Are you going to be spending time with your grandkids, or will you be starting a new hobby, or maybe you even want to work part-time in retirement? Once you have a written plan of what that's going to look like, it'll be easier to figure out how your investments are going to play a role in your retirement planning. A common myth around financial stability in retirement is that you need to create 10 to 12 times what your current income is for your retirement years. Now, this doesn't really work for everybody. It might make sense if you're younger and you have maybe 20 to 25 years for retirement. That might be the case because you're factoring in inflation and a lot of other things. But if you're within 5 years of retirement, you probably don't want to create 10 to 12 times what your income is because your retirement years are closer now. This is why it's so important to have a written plan and to keep updating it as you get closer to your retirement years. For example, I have a new client. It's a couple. They're in their 70s. And prior to meeting with me, they were just kind of piecing together their investments. They had a couple of IRAs, a couple of annuities, a 403b. And what they were doing is that they were both taking Social Security, and they were draining one of their annuities. That annuity had an income rider, but they didn't use the income benefit. They didn't realize that the annuity had an income rider, and so what they did is they were draining that annuity. And that's counterproductive because the purpose of an annuity with an income rider is to give you an income stream for the rest of your life. So if you drain the annuity, you cannot utilize the income rider for why you've purchased it. So again, it's very, very important to make sure that you have a written plan, list out all of your investments and where you're going to be getting your retirement income from. Here's a step-by-step process of how to have financial stability in retirement. Number one, make sure you have a written retirement plan. List out all of your sources of income, where your income's coming from, and then also what your expenses will be in retirement. Number two, make sure that you know which investments that you're going to be drawing income from first. Look at your taxable investments versus your tax-free investments. What's going to make sense for you to draw income in retirement? And number three, make sure that you're regularly updating your plan because things change. Thanks for watching today, and I hope the information has been valuable. If you'd like information on your specific plan, feel free to contact me for a complimentary appointment to talk about your specific situation in the link below. Also, if you found this information valuable, don't forget to like, subscribe, and share.